In this video, I want to review the latest moves from Bill Ackman, what he has bought, what he has sold. You see some changes on Dataroma. This is a website that tracks what super investors have been buying, selling. So you see some colors here, you see some changes. In this video, we will go through line by line what has been the changes. And let me start by saying that there is a line Uber that we don't see here, so there is additional things to say about this report. In case this is your first video from this channel, welcome. My name is Christophe Nour. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And Dataroma is a great source of ideas to compound your wealth at 15, 20, 25% per year. So I watch all the super investors on this website every quarter, and this is the turn of Bill Ackman. Right, okay, so you are talking about Bill Ackman from Pershing Square, 10 stocks in his portfolio, so we are talking about a fairly concentrated portfolio, not a lot of activity normally. And you see, look at this, if I click on activity, you don't see a lot of activity, you don't see many trades. So now 5 or 6 trades for this quarter. Okay, the first position in his portfolio is not Brookfield, strangely enough, it's Google. Google, you see here, he holds 11%, and then you have another Class A share of 6%, 11 plus 6, or that's 17%. So 17% holding in Google, no change in Google. That's a high conviction play for Bill Ackman and for Lilu and for all the many investors. Completely normal and no change. So that was for the first position. The second position is Brookfield. Well, that's already 15 or 16% of his portfolio. A small ad. In case you don't know what Brookfield does, that's the leader in alternative investment, and it's a Canadian company. And they have different parts. You have asset management part, renewable parts, infrastructure parts. That's a big fund led by one of the best investors of our world, Bruce Flatt, a Canadian CEO. This is a company with adjusted metrics, so maybe you will not find something relevant if you check net income here. This is not how we analyze Brookfield, and we analyze Brookfield with distributable earnings. Bill Ackman has talked a lot about Brookfield. So in case you want to go deeper into Brookfield, I recommend you check what they have to say. And I also recommend the latest earnings call from Pershing Square, the company of Bill Ackman, because they explain in great details what is the thesis around Brookfield, how this will be a long-term compounder that can generate at least 15% per year. So high conviction. So we've talked about Google, no major change, long-term hold. Now Brookfield, a small ad, 6% ad, because they still believe in the thesis, and the stock has rebounded sharply, and they believe they have more upside in future years. Now, if you adjust for some metrics, the distributable earnings give you a price to DE of 17. That's almost a price to free cash flow of 17 for a business that can grow 15% per year. Yeah, with a strong management, with a strong moat, and a great vision. I mean, the stock is not expensive if you look at it this way. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. The next stock in his portfolio is QSR. So quick service restaurant, you have Burger King. No change at all. Bill Ackman made most of his money with restaurants, a lot of his money with restaurants, and was always profitable. He is an expert when it comes to restoration, drinks, food, McDonald's, Coca-Cola, these kind of things. He knows a lot. And I mean, recently we've seen some critics for Bill Ackman saying that he's talking about health issues and obesity in the US, but still he's invested in quick service restaurants. I think these are great businesses. The health issue is not his issue. I mean, that's his style of investing. He invests in strong businesses with pricing power, with a moat and a great vision. And this is exactly what QSR is doing. The next move is a reduction in Chipotle Mexican Grill. You all know Chipotle. I'm sure you love it. That's a 15% reduction, but that's still 11% of his portfolio. If you check Chipotle, you see that the stock price has been running hot. He bought the stock in 2017 during the health scare, so at a stock price of, I don't know, 7, maybe 6 or 7, and now the price is 60, and the price is a little bit overvalued at the moment. The company is a little bit overvalued at the moment. You have a PE ratio of 40, 50, so maybe it's not enough. It's not so overvalued that you have to completely sell out of the position, but he is trimming a little bit. That's fine. He has not changed his mind. The business is still profitable, generative, some strong free cash flow, doing some buybacks here and there. The company is still fine. Just I will add something to Chipotle, saying that there has been a change in CEO. The CEO of Chipotle left, I think, in summer 2024 to go to Starbucks. So maybe you can expect a worse management for the coming years. I don't know. It's all about efficiency at this point. Okay, still a lot of conviction. You see, these are concentrated bets, like 10% position in a portfolio. This is some concentration. The next one is Howard Hughes Holdings, something I'm not really familiar with. If you check the latest slides from Bill Ackman, they talk about it a lot. I'm personally not a fan of what they do. This is a real estate play, and if you check the latest stock performance, you are talking about a business that is still struggling, I would say. The valuation, I don't know. This is a company that at first glance can have a lot of debt, but this is a real estate company, so it's normal. And still, it seems like they are struggling at the moment. So wait and see. If you check the latest slides from Howard Hughes, maybe you will see more details, more information, what Bill Ackman is thinking about the company. But no change for HHH. The next one is Google. We've talked about this one. Nike is different because now I'm recording this video on February 2025. The latest news is he sold Nike to buy an option for Nike investments. In other words, he doesn't hold the common shares anymore, but he has an option in case Nike's investment is doing well. So if you check Nike, you see that Nike has been struggling for a while, since 2021. They changed the CEO, they changed the management, they plan to come back to the roots of the business, and this is a turnaround play. This is a company with some good branding, good moat, but the moat is getting attacked right now by smaller competitors. So it's a turnaround play. We will see if Bill Ackman is doing some activism work here, but apparently he added a little bit and then he sold the common share to buy an option. I'm not sure of the percentage anymore, but still what we know is he is still invested in Nike. Okay. By the way, I will talk about it now. He transferred the Nike shares into options, and he used the cash in his portfolio to buy Uber. So he used the conversion to an option to buy Uber. You all know Uber. This is the ride-sharing company that also does food delivery, and seems like the company has changed in the latest quarters because now the company is generating some strong free cash flow. Let me go here, free cash flow here. This is the line in blue. Before, like 2 years ago, the company didn't generate any free cash flow, and now the free cash flow is increasing. Same thing for the net income. Before, the company was burning money. Now they are at break-even and finally generating money. Before, the company was issuing some shares, like diluting shareholders, which is not a good sign at all. And now seems like it has stopped. We will see. This is again a turnaround play. Uber is a bet on a revival of the company, generating some strong cash flows, growing profitably, because Uber is the leader in its category. So maybe that's an excellent investment from Bill Ackman. I'm not personally a fan of the moat, but in case you are interested in this one, you can compare it to Lyft or to other companies like DoorDash or Deliveroo. This is a competitive space, and the PE ratio of the company is not that expensive. Like you are talking about a PE ratio of between 20, 30. That's not that expensive if you think this is a quality company. Just so you know, yeah, on Dataroma, the Uber investment will not appear, but he is invested in Uber. Now we know it. Hilton Worldwide Holdings, he reduced the position by 25%. In case you don't know Hilton, I mean, that's a hotel chain in the US. What is the ticker symbol? HLT. He has been investing in restaurants, but also hotels, fast food restaurants for a while, and this is a classic example of Bill Ackman investing. This company is big, $70 billion of enterprise value, and this is a renowned brand all around the world with a PE ratio of 30, and the company is growing back from the COVID levels. So business as usual. You have some buybacks, some free cash flow, some debt, but that's fine. And this is like business as usual. A bet on travel and a bet on the world opening up. So that's a simple investment thesis. He reduced the holding a little bit, not that much, only by 25%. I suppose he reduced a little bit of Chipotle, reduced a little bit of Hilton, and then sold the common shares of Nike to use all the cash to buy Uber. So maybe Uber is a big position in his portfolio. The other one is Canadian Pacific Kansas City. Really simple investment idea. What I like about Bill Ackman is that the investment ideas are really simple. Like Uber, everybody could have it, could think about it. I've seen people on Twitter thinking about Uber. That's fine. Google, that's very simple. Canadian Pacific is also very simple. In case you don't know what the company does, it's a railroad business in Canada. So that's basically it. They go through the Canada, US, and Mexico, and like all railroads, the stock has been doing nothing for 3 years, 4 years. Like all railroads in North America, this is a company that is generating more revenue over time. You are not talking about a lot of growth, but still profitable growth. Look at the net income. Net income is growing profitably. Like all railroads, they generate some cash. So some strong cash flow. Look at this. This is the free cash flow in blue, up and to the right. So what is that? You have a little bit of dilutions here. Maybe I suppose they did a strong acquisition here. Yes, they did a strong acquisition in 2021. And now the company has used some debt to fuel the acquisition in 2021. Maybe if you want to go deeper on this one, you can check what happened in 2021, what was the acquisition, and how did it work out. Because the company has not shown a lot of efficiency since then. I mean, this is a net income in 2021 and almost no growth here. Okay, that's interesting. That's a simple investment that yielded no results for the past few years for Bill Ackman. Maybe in the future, yes. And this is 8% of his portfolio. That's another one. Google. So Google is 17% of his portfolio. Don't think that Brookfield is the biggest position. And the last position is a small position from Bill Ackman, Seaport Entertainment Group. He doubled the investment in his position. This will not move the needle for his portfolio. This is only 1% of the holdings, so no major change here. This is they operate and develop a unique collection of assets positioned at the intersection of entertainment and real estate. Okay, its objective is to integrate one-of-a-kind real estate assets with a variety of restaurant, retail, and leisure offerings to form a vibrant mixed-use destination where customers can work, play, and socialize. Yeah, okay. I'm not a fan of these small investments. We will see. The company is still not profitable. They have some debt, and the company is new actually. The company went public in July 2024, and the stock has been doing nothing. Not a lot of visibility. Maybe Bill Ackman knows something that we don't. I suppose that's the case, and this is the reason why he doubled down on this investment. So don't be surprised if the stock doubles and in a few months people say, oh, it was easy in hindsight. Now we have no data, but if you want to do the due diligence, you can find this small company. The market cap is $400 million, so we are talking about a really small company. By the way, if you want to know more about Bill Ackman's portfolio, I have here the presentation from February 2025. You have 75 slides. I went through them, but I don't have the time in this video, where he explains the strategy, the returns, etc. And if you scroll down a little bit, let me check. You have the investment thesis for the companies he owns. So that's basically it. You have UMG also. Where am I? Here, UMG. Okay. I mean, maybe they don't own the common shares. This is the reason why it's not appearing in the Dataroma document. You have Google, you have Brookfield explanation, you have QSR, so the explanation why they own this company. You have Chipotle. They still believe in Chipotle. You have Nike, you have Hilton Worldwide, you have Howard Hughes Holdings, and Canadian Pacific Kansas City. Fannie Mae and Freddie Mac also not appearing on Dataroma. Maybe they all hold not common shares but options, derivative instruments. And Uber. So in the next Dataroma document, Q1 2025, we will see Uber. We will see Uber and how big of a position that is. Maybe he will buy more as we are speaking. Maybe he will sell a little bit. We will see. And that's basically it. So in case you want to know more about his investment thesis around these companies, you can check the website of Bill Ackman, Pershing Square Holdings, and you find these documents. So I hope this video was helpful. I wish you a great day. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio. Additionally, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you are blocked, if you have any questions, I'm here to help. Click the first link in the description to get more information. You will get a video that explains how everything works completely for free. No need to sign up, no need for your email address. Just click the first link in the description and I'll see you on the other side.